Okay, what's up, everybody? We're going to do a market review today. Today was a decent day. We got some movement downside. And again, we're looking at today's date is the 24th. The market review is for the 24th, of course. I'm doing this review after market open, so the next session has opened up for Thursday. That's why it's green. But today's price action happened with this candle right here. So yeah, this is the daily. Obviously, the trend is up. So we're not really excited about shorts, but it depends on if we get decent market structure shift to decide to short. So if you saw the price action for Tuesday, you would have seen that there was a lot of people that were just hitting the bid, and it was really aggressive selling that happened on Tuesday. So there is a bit of that happened today too. So just before today, right? Well, let's look at, okay, so this is the day before today's session. If you look at it, it's kind of hard to see, but if you look at it, these two candles, the high of Monday's right there, and the low of Monday's right there. So it's really always a good idea to look at the previous day's lows and highs just to see where you're currently at, right? Because there are just certain places that are not a great idea to trade from. So it's a great idea to look at where you're at. So for today's session, this is what happened the previous day. And the previous day had a low here and a high right here. So you can't tell with these highs because they look like they're the same, but if you look at the high of this day, it's 25,027 and a quarter. If you look at this day's high, which was Tuesday, it's 25,026 and a quarter. So there's really just 1 point of a difference before we decided to sell off. And obviously the low of Monday, let me move this guy here. The low of Monday, the 22nd, is lower than the low of Tuesday. So what that makes this candle is an inside candle. So when you have candles that, that's terrible. I wish I could make this extend right. Let's stop that right there. So if you have a candle, oops. Okay, if you have a candle like this where the high is higher than the current candle's high and the low is lower than the current candle's low, that makes it an inside candle, which means these inside candles oftentimes are kind of a consolidation stage, and they oftentimes lead price aggressively either down or aggressively up. We were trying to figure out what would happen for Wednesday, right? So if I do Command Z and get rid of this stuff, we're probably looking for lows because the previous candle did come down, right? So we would expect price to take the low, take this low especially, right? So that's kind of what you're thinking of in your head before you even go into the day. So let me exit out of this real quick. Okay, so now that we've gone over the inside candle, we're expecting for a low to be taken out. Again, ignore this candle because this is today's session, which is the next day. I might be confusing you by the many times I'm using the word today because I'm recording this video after the session has ended. So let me actually put this bad boy right here. Let me put you down a little bit. Okay. So this is the hourly candle. 9 a.m. is this candle right here. And it kind of happened pretty quick before we even got to 10 a.m. So this move, I didn't catch down because I usually don't trade when the market opens at 9:30 EST. By the time that this move had already happened, you know, the move happened. And then there was a lot of consolidation in this area because we were, let me delete that. We were coming back to the origin of the move from the previous day's low. So let's make this a little bit bigger. Okay, so here's a swing right here that ends up being closed properly on the upside by the screen candle. And so what I usually expect if that happens, right, is if there's a move, this happens, and then this happens, I'm expecting 50% of this range that we took up to the highs. Oops. Let me delete that. This is why these things are terrible, but I'm gonna just draw that up again. If we do this, I'm looking for this range is 50%, so somewhere around here. Let's guesstimate and then continue. That's kind of what I'm thinking, right? This is called market structure. So we saw that this market gets shifted right here when we get above it and we close above it. So we're expecting a consolidation a little bit up top and then eventually to dig inside of this range up until the 50% or lower to get a better entry and then continue going up with the trend if it's going to continue going up, right? That's the idea. So it kind of does that. It hits 50% perfectly with this candle. And then we bounce out of the range, which means we do exactly what I just said with that little drawing. We take out this high, right? So that was great. That was yesterday's bounce from the lows after we made that crazy move lower. And so starting today, when the market was opening up with this candle, I was expecting shorts. I just didn't expect it to happen that fast, and it did. And so when we got below this low that I was already expecting to come down, there was some consolidation because this was the origin of the move that brought it higher. So you can see after we hit the 70, we bounced up past the 30 and we held here for a while. So if we go down to the 15-minute and look at it, you can see a lot of this consolidation really didn't go anywhere. But this can be a really quick trade if you know where price came from before it did something. You can expect that there's going to be some reaction. It may not be a reversal, right? Like if you're expecting something like this, it may not be that if the market is not going higher. But what it could be is boom, 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 boom. Or if it's not that, these things I kind of don't like using. Could be that, and then could be that, it could be that, and then it could be that too. Right? So which is what happened today. So I'm right here just waiting really for this low to get taken out, and then also this low to get taken out, because these are really good lows that created movement to a specific direction. So if we go here, this actually let's look at this. Let me look at drawing it from the bottom up so it makes sense. So this right here, this swing right? We have a swing high, swing low, swing lower high, swing, not exactly our lower low, but then we break this by doing that, right? So we take this swing, or you can count this whole big swing because this is a mini swing. I would look at both depending on context, but we did take this out, this area, and we never came back to it and retraced before we went up. So we call something like this origin of a move. And that happened. We never came back to it until you see this candle, right? So if I were to expand this, you can see we hit the 70 almost perfectly with this low, but I'm confusing you with too many lines, so I'm just going to take it back. But do pay attention to that in the future though. What we're looking for is for a break of a swing, this or this. I prefer this one for now. And then to retrace back into the 50% or ideally 70, and then go higher in the direction of the market. So yesterday we came back and hit this low, hit the 70 of the origin of the move of the previous day, and then we bounced and retraced a little bit. Today we were expecting after that retracement for continuation, and that happened. Of course, like I was saying, it happened a little early in the morning, and then there's a little bit of a retracement, and then we took both lows out. And so when you take a higher time frame low, typically what happens, we even took this low right here. You can expect somewhat of a retracement. So my thinking is to wait. I also missed this move too. I was waiting for a retracement that was clean enough for me to take because that's where I was as far as when I got to the charts. So let me clean up a little bit. So when I got back to the charts, I was looking at right here. And as usual, I'm expecting the swing that gets taken out to be retraced into. So this swing right here got taken out just slightly by this candle. And I was expecting it to get back into the 30, the 50 ideally, and then below. But there's a fair value gap, so I would assume between the 30 and the 50, right? Fair value gaps can hold some weight. And it did neither. And so when I was looking and waiting at the same time with this consolidation, I was looking at the tape and what was being printed. And I was noticing that a lot of people were just buying these lows. There's just no seller that could hit the bid and continue lower and take this low out. So after a while of just seeing that, I decided to take a long right here after we bounced for the third time. And I aimed for this swing high. And I just trailed up as it went up. I mean, there was not really any retracement after we took the high. We had retracement, but up until then, there wasn't really any retracement at all. It was just kind of straight up. It was pretty quick. And it helped that I saw what was happening in the tape because I was still waiting for it to come lower. And so sometimes it never really does exactly what you want it to do. Not sometimes, a lot of the times it never does what you're expecting it to do. But this turned out to be a great trade. I took another one from this candle up. Didn't really aim for the high. I didn't know if we were actually going to take that high. But if you look at, so let's delete that swing. Let's look at this swing right here. Right, this swing right here was responsible for this move up because this candle, a very strong candle, took it out perfectly. And what do you see right here? It comes back into the range, into the origin of the move, goes below the 70, and it creates another swing right here. And what we want to do is pretty much kind of like the movie Inception, where kind of things kind of just go deeper and deeper and deeper, but they're kind of the same patterns. We want to create the same sort of origin of a move idea. So this candle right here is also a swing because it got taken out perfectly by the screen candle. So what do we expect it to do? We expect it to retrace again into the 50 or close, and then we go higher. So if you were taking this move, you would aim to reduce the risk for this high. It takes a while to get there, but it does get there. Does it get there? It gets there after a while, like a long while. It gets there in the next session. So, you know, as you're getting closer to the day closing, you might maybe be a little bit conservative and maybe aim here, or you can go into the lower time frame. Yeah, you definitely would aim. You can aim for this one right here. This swing low is cleaner. This is a low hanging fruit, they call it, which is a little easier. And you can call it a day here. That's a 3 to 1 ratio from reward to risk. You know, you risk a little bit, you make a decent amount of reward. So two pretty decent setups that you can see in the lower time frame. I took this one. I believe this is what I took. This was the trade I took, which was actually pretty good RR, but this one also could have been nice. I shut down the computer afterwards, but the goal is you're not going to get them all, right? You're not going to catch them all like Pokemon, but what you can do is just look for places where, you know, there's a lot of consolidation maybe. And if a price decides to break out in the direction, what you want to do is you want to see what the range is of that consolidation that created that move, and look for, you know what, let me redraw this. Let me redraw this in one go. If you have something like this, you want it to retrace into the 50% of the previous range and then let it continue, right? So what you would do the first time this high and this low get taken out, you just create a fib retracement, and this will let you know these numbers should be reversed. So let me do that. I always do that. I reverse the numbers, but I don't really care because I just care about the lines anyway. You're looking for either the 50% or the 70 to get hit. If you're lucky and it hits here, this is probably the best RR. You're gonna risk the least to make the most. If you hit 50, that's also decent. If it's in the 30, sometimes it's often gonna leave you because you're probably gonna be waiting for the 50 and 70 to hit. If the 30 usually indicates that the trend is really strong and that you need to keep up with it and watch how strong it is and go with as quickly as it's willing to go back into the intended direction, because of course you should be trading within this zone, right? You should not be trading outside of it. You should only be trading with the zone. And then vice versa on the downside, right? Like if we're doing the same thing and go lower, you want to go back into the previous range right here. Go here. Oh, what the heck did I just do? Oh, that candle went places. That candle, not candle, I mean that retracement. Let's do it again. Okay, so you're gonna use your fib again from down to top. and see if this guy is trying to get close to your 70 or 50, whichever one works. And you wait for it to kind of retrace a little bit and go away from that area, and then come back to it a little bit to give you another entry. And then, you would go short right here. Reduce your risk. Aim for the low that you previously took. And you would do the same thing here. You would aim for a high. Let me bring this a little bit closer. You would take this here. Low to stop. You would aim for this high. And that's your trading. That happened a couple times today. So I think it was a decent day. When you have, a couple days ago we had FOMC, which was the rates. People were trying to figure out, if they were going to decrease the interest rate, and they decided to decrease it by 25 basis points, which everybody was kind of expecting them to. But then Powell comes in and says, people need to get better skills because they can't get hired with these different times. And so then that kind of indicates a recession, because it's like, bro, if people can't get jobs, then sayonara, you feel me? That is it for today. Hope you guys had a great session. Today was green for me, and we're gonna try to keep it that way. Till next time, good people, have a great one. Peace.